Hello, everyone, and welcome to another one of the one-to-one mining investment APAC online content sessions. Today, for the battery metals panel discussion, we have Gavin Montgomery, Director of Battery Raw Materials at Wood Mackenzie, Sophie Liu, Head of Metals and Mining at Bloomberg NEF, Joyce Zhang, Associate Editor, Non-Ferrous Metals at S&P Global Platts, and Adam Best, Principal Research Scientist at CSIRO. So I guess we can get right into the discussion. Thanks everyone for joining today, first of all. But let's kick off with maybe a quick discussion about how has COVID-19 impacted the battery metals markets, and do you see recovery starting to happen, and where do you see that coming from? Maybe Sophie, if you want to kick us off.
Sure. In terms of the different battery metals that we track, most of the impacts that were felt in the supply side were during sort of late Q1, early Q2. There were some minor disruptions to lithium production, particularly in Latin America, with some 2-week to month-long closures in Argentina. But most of the closures were sort of pretty minimal in terms of their impact of the overall production flow of those assets. So not too bad of a disruption on the supply side for lithium. At Cobalt, on the mining side, there was a little bit of issues with especially with artisanal cobalt mining in the DRC in terms of supply. But if you look at sort of the trade flows between the between the DRC and China, there were some minor disruptions on cobalt ore and concentrates, but not so much on hydroxides and oxides. So that did mean that for the larger producers that were the larger refiners in China, they were still pretty much obtaining the raw materials that they needed. And then on the nickel side, we did see some minor disruptions to assets in Southeast Asia as well as Canada. But again, I think most of the disruptions have worked themselves out by the end of Q2. So we did revise down our supply side forecast slightly for a lot of the battery raw materials, but the demand side revisions in terms of lowering the demand for them were also there. And so in balance, pretty much the markets did not change that much, and we're still looking at a little bit of oversupply maybe going into Q3, depending on the pace of the recovery of demand in the second half of the year.
Great. And Gavin, maybe you want to jump in and kind of give us some notes on what you've seen.
Yeah, no, I think the important thing is that a lot of these key markets were already suffering from structural oversupply before the pandemic hit. You know, we've had lithium prices on the decline for the last couple of years. Cobalt is still trying to work through huge stocks throughout the supply chain. So, and then we obviously had a weak year for EV sales in China last year. So the pandemic is hit, at a very bad time. And Sophie chatted around some of the issues on the supply side, but overall, 2020 is looking to be a lost year really for EVs in many ways, so it will recover. And I suppose the positive points of the pandemic have been that people have seen the benefits of greener skies and, clearer air. And, there's definitely a feeling from governments they want to come through the other side of this in a more positive way and a more sustainable way. So there's been extensions of subsidies in Europe. European EV sales are doing quite well, but it's been a tough year.
Yeah, absolutely. And Joyce, what have you been noticing, especially maybe on the pricing side of things?
Yeah, certainly we do agree with Sophie and Gavin on the supply and demand side about COVID-19's impact on battery metals markets. And some good news recently is that we have been observing about price bottom out for lithium carbonate in domestic China, and as well as certain recoveries on the cobalt sulfate side and nickel sulfate side due to the structural temporary supply tightness in domestic China, and also slightly rebounding demand from the downstream side. So overall, we have already noticed that COVID-19 has imposed a lot of quite pretty negative impact on the supply and demand side in early this year. But things are getting better. Things have gotten better in China, and we have seen slight recoveries in the rest of the world as well. So that could be something slightly more positive on the fundamental side.
Absolutely. Adam, I'm not sure if you'd like to weigh in here at all, or?
So I suppose the biggest impact we've seen in the research and development area is that a lot of companies are now holding cash. They're definitely feeling the pinch from much lower sales impacts, and they're just trying to basically carry as much cash as possible to weather through the downturn. And R&D at this time is really not a priority. Some companies that had done fundraising prior to the start of COVID-19 are in much better places than those that had not. And so we have seen some research companies come and do research with us in order to better position themselves for post-COVID. But definitely, we're definitely seeing the impact of this in the battery world, and particularly as a researcher.
Yeah, absolutely. And I guess maybe we want to talk a little bit now about kind of the impact that it's had specifically on EV uptake, whether that's across APAC or globally. Maybe Gavin, you want to kick us off this time, or sorry?
Yeah, sure. I mean, it's obviously hit it hard. I mean, China's had a tough first half of the year. I think Europe actually overtook China's EV sales in the first half of the year. Some people are getting more bullish as we're seeing some year-on-year growth in Chinese numbers, but we also have to remember that the second half of 2019 was pretty weak. So, not to get too excited too soon. I think, we're still expecting a sizable contraction in Chinese EV sales for this year. It's still heavily subsidy driven. So, the subsidies have been coming in Europe and sales have been picking up. But, it's again, as I said before, I think a lost year for EV sales for us, but, we're expecting a relatively sharp bounce back next year.
I might jump in after that. Yeah,
sure.
Relatively similar view as Gavin as well. We saw much stronger than expected Q2 sales out of Europe, and then relatively weakness in most of the APAC markets. We are somewhat optimistic. So the way that we did our scenario forecasting for both supply and demand was we planned around 3 scenarios post-COVID. There's the single wave pandemic, and then our base case was a multi-wave pandemic, which assumes that the global economy doesn't really recover until the first half of next year. And then an enduring pandemic, which is a pessimistic case, in which case the global economy doesn't recover until the end of next year. So in our base case, what we've seen is actually EU sales for EVs has surpassed our base case and is actually tracking closer to our optimistic scenario, whereas APAC is tracking pretty much in line exactly with what we were expecting for our base case. No one's really tracking the pessimistic scenario. The U.S. has had a bit of a slower start to the year, but but there hasn't really been any sort of notable impacts from specifically COVID itself. And then we are sort of reserving judgment, but maybe our Q4 outlook might be slightly upgraded pending on because of some policy changes that have come through in both China and Korea. So Korea has the Green New Deal that they implemented, which we expect will be able to help upgrade their EV sales trajectory. And then China has finally it's nearing the finalization of their new energy vehicles policy, and they revised some of their sort of credit system that can be allocated to certain models of EV sold for automakers. They've made it more aggressive so that you effectively have to sell an even better EV or even faster in order to be able to meet sort of the decommission, the zero emissions credits targets that each of the automakers have to meet. So both of those are factors that we see as being kind of optimistic, but whether or not they would be able to come into effect this year rather than affecting the trajectory for next year, we're not 100% sure on that yet. More likely next year.
Mm-hmm. Joyce?
I think the other thing to add as well in Australia is is the government just released its innovation roadmap, and in there's actually now for the first time going to be federal government subsidies here for electric vehicles, as well as charging stations and electric vehicle infrastructure. So that could actually help spur a lot more local investment in Australia towards electric vehicles and electric vehicle infrastructure.
Absolutely, that's very encouraging. Especially, I think the rumor is that there should also be a specific transport technology roadmap or kind of investment plan that it's like the last one in the package. So we've done one for oil, we've done one for gas, we've done one for clean energy, and now the question is whether or not there'll be one for transport as well. So that should also help to uptake the market a little.
And there's also to be released in the next couple of weeks, there'll be a report from the Future Battery Industry (CRC) around the state of play of Australian battery industries, and beyond that, we're at CSIRO. We're already working on a national battery roadmap, which will be really important in terms of defining how we can make the most of our battery minerals and turn them into battery materials, and then also processing further downstream to cells and then packs, and beyond that, even recycling.
Yeah. And Joyce, I don't know if you want to weigh in here at all?
Yeah, I totally agree with that. And also EV uptake has been pretty strong since the entire world started dealing with the new norm with the COVID. So we have already noticed very positive numbers from EU and China in Q3. And moving forward with government support and the shift away from public transport, we might be able to see the shift into the EV space accelerating. And the key determining factors here include, well, first, the time frame for when coronavirus was at peak or like more severe in each country or each region, and also as well as the availability of any EV friendly or environmental friendly or the economic stimulatory policies in place at each geographic regions. So kind of, for example, in China, we have witnessed the peak of the pandemic in February, and well, which led to a lot of new car sales falling drastically. But however, kind of like the automobile market eventually rebounded and made a V-shaped recovery. And also in Europe, there has been strong push for electric vehicles from the mandatory EV carbon dioxide targets for manufacturers. And also there has been a strong push to reserve the COVID-19 related economic downturn. Like for example, in Germany, vehicle owners can receive a bonus of up to 9,000 euros when opting for an electric vehicle. So that's basically these two factors are quite key to monitor, to keep an eye on it in a short or medium term.
Mm-hmm. Do you see recovery stimulus measures being directed specifically towards EVs and batteries, or?
So we've been tracking stimulus dollars spent globally, and we've tracked around, I believe the last count was $2 trillion in total stimulus spending across the world, of which about 10%, let's see, 890 billion. So 890 billion out of 2 trillion has been allocated for essentially carbon intensive industries without any green commitments. So that's really any kind of industry that is relatively high carbon emitting without any commitments towards reducing emissions or moving towards a technology trajectory that would be lower carbon emissions. And then only about 10% of the 2 trillion has been committed to anything with a green commitment. So that could be either with supporting renewable energy or the adoption of electric vehicles, or targeting traditional industries like steel and aluminum production, but with a commitment to moving them towards a lower carbon trajectory. So BNEF's sort of global tracking of the dollars so far, that's what we've seen. It's I guess you can see it as being glass half full or glass half empty. How much of that is not actually going towards doing more sort of acceleration of the green trajectory. But I mean, the majority of stimulus money that's been spent so far has been not really specific to either carbon intensity or not carbon intensity. It's mostly, you know, things like JobKeeper and helping the average consumer. Yeah.
Yeah, absolutely. And a lot of the conversation when we're, you know, coming out of COVID has been about the battery supply chains. We had a lot of supply chains kind of shut down when transportation and you know, the global lockdown was happening. you know, how is the discourse on the battery supply chain shifting? Where do you see kind of things going? Maybe Joyce, do you want to start us off here?
Well, COVID-19's impact on the supply chains, or more on the shifting of the supply chains, we noticed a lot on the cobalt side. Kind of like, for example, some cobalt hydroxide suppliers tried to shift their different ports in logistics, and we also see more OEMs striking long-term supply directly with the miners, such as BMW, Tesla, which we have never seen before. They signed long-term contracts to supply the materials, and also kind of like control over such scarce raw materials like cobalt, is reaping the benefits, as exemplified by Tesla's case, as it brings up more efficient ops and quicker turnaround in research. That's mainly what we haven't seen in the changes in the cobalt supply chain side.
Yeah, and I think as well, I mean, as obviously it was a while back now, but when the pandemic got underway, we saw, you know, supply chain risks exposed, you know, not just in medical supplies, but, you know, people saw the potential impact on a number of things, you know, of being, you know, 100% reliant, for example, on China. You know, as we all know, in the battery raw material supply chain, China dominates in a number of areas, you know, from synthetic graphite to natural graphite to cobalt, as Joyce was just discussing, lithium processing. So I think, you know, there's the supply chain awareness. There was already a lot of voices pushing for regionalization of supply chains before the pandemic, and you know, we had in Europe, we've had a lot of investment in terms of building mega factories or gigafactories, but not a lot of investment really in terms of the cathodes and the precursors and the refineries to produce the sulfates, etc. So I think there's definitely been a wake-up call there. The EU's now formed a raw material alliance. They've put lithium on the critical materials list, and I think these projects that are trying to get off the ground to produce lithium chemicals or graphite in Europe are definitely getting a lot more attention since the pandemic.
Yeah, definitely would agree with you there, Gavin. In Australia, there's definitely a big push now to try and value add our battery minerals in order to actually meet the needs, particularly of Europe and Japan and Korea. And we're seeing also a really strong interest through the Australian Trade and Investment Commission for companies to come and talk to us about who are the companies they should be speaking to, what are the investments that are needed in order to be able to make the most of the battery metals that exist in Australia and turning them into value-added goods that can go straight into the battery supply chain. So I think there's a very much a strong change coming that we haven't seen previously, and there's even an appetite here in Australia, which I haven't seen previously, for companies to actually move further downstream and capture more of the value in their battery metals.
I would definitely say that there was very much a push already before COVID, and COVID, I think, was just sort of the last impetus or censure that convinced, I think, a lot of political powers that be in different countries to start listening to the voices around supply chain localization or regionalization. And then I felt like Tesla Battery Day, Elon Musk kind of made a very effective appeal to the needs for the industry to look at more vertical integration and consolidation by cutting out the margins of third-party providers at 3 tiers along the supply chain. He's hoping to achieve, pretty significant cost savings across his manufacturing costs. And so it remains to be seen whether or not everybody should become generalists across the battery materials and be producing every component, or whether or not maybe some level of specialization and scale does help to keep costs down, maybe better than just simply across the board vertical integration. So we can debate whether or not all of the choices that Elon announced were necessarily the wisest, but there is something to be said about the supply chain for battery raw materials and for batteries in general to be being one of the most distributed, one of the most scattered, and one of the most not vertically integrated that we see in most sort of large scale industrial products. So there is something to be said about there perhaps being too much fragmentation in the market, and that it just makes business sense, not just political sense or regional sense or strategic sense, but business sense to consider more vertical integration in the supply chain. Yeah.
There's also the thing to remember that some of the processing of battery metals, you just can't do that in every country, because the environmental regulations that go along with this are just not tolerated. So we can obviously use the example of artificial graphite. Artificial graphite is largely only produced in China because of the horridly polluting nature of that process and the energy intensiveness that it requires to produce artificial graphite. And hence why there's been a very strong push towards natural graphite, because it's obviously lower in intensity for energy requirement to produce. But there are also other methods for producing natural graphite that doesn't require regressive chemicals such as hydrofluoric acid for the purification step. So there are shifts and changes in that regard, which allows for changes in the supply chain. But it also means that some countries are better suited to do that work than others, because some countries obviously don't have that. So that's why you're going to see, I think, African natural graphite really start to move forward, because as an alternative supply to artificial graphite. And then also in Australia, where there's obviously being more and more deposits being found, and more companies are seeking to actually see whether their graphite is amenable to spheronization and use in battery anodes.
Yeah. And so, I mean, I think it's interesting you bring up Battery Day, which happened last week, and certainly the shifting, supply chains and vertical integration was a very large part of what was announced. Also was announced kind of the shift in battery chemistry that they're looking to do by, cutting out cobalt, this sort of thing. What's the general feedback that you've heard from the industry on Battery Day and all of the various plans announced? And I suppose, do you want to take kind of a position on it? Feel free to kind of share your thoughts and feedback on that. Maybe Gavin, do you want to start us off here?
Yeah, well, there's a lot to unpack about Battery Day. We could probably talk for an hour, I think, for those of us who follow the sector. We put out a note on it last week called "Too Good to Be True." Yeah, I mean, there was a lot of good stuff in it, but it felt a little bit like, they'd looked at every area of development underway in lithium ion and said they were going to do everything very soon. There's a lot, the silicon and the anodes, there's companies been working on this like Sila Nano and for years and years, without meaningful breakthroughs. So it just felt there was a lot there that they were trying to do at once. I mean, certainly I think the biscuit tin cell, the tabless battery, all these things are very exciting. Again, the potential for dry coating, it was very exciting. But I think when they strayed onto the mining and refining part of it, that's when it got into fantasy territory a little bit. I think they've purchased this deposit in Nevada, but and it's apparently going to be very easy to extract lithium with some table salt and make lithium chemicals. And I think everyone just wasn't too confident in the promises there. But I'd be interested to hear what my fellow panelists think as well.
I suppose as a researcher, from the perspective of technologies that Musk was speaking about, silicon is well and truly established in the marketplace now, and pretty much every cell manufacturer uses some small amount of silicon in their cells. Obviously, the challenge is to increase the silicon content to increase the energy density of the anode, which then leads to thinner anodes and other challenges that come with the mechanical performance of the electrode. Then of course you have all the workaround on the cathode side to the next generation of NMC material. So the roadmap's been laid out for quite some time amongst the academic community about where this is all going. I don't think for us there was many surprises in that. He actually has got investments in other companies which really do have some breakthrough technology, but whether that is able to be brought to market I think is a substantial challenge. So not to be too much of a cynic, but as a researcher, it's a bit like nothing much to see here. It's all the challenge from a researcher's perspective is how do you scale these technologies, and that's the question. Has Tesla been able to do that and do that in a reproducible fashion to be able to deliver technologies that are going to be safe and higher performance than what's currently in the marketplace?
Yeah, I think I agree with the observation, particularly around some of their plans for battery chemistry and the silicon anodes, and the fact that they are invested into a few companies. One of the major issues or challenges that our battery team highlighted in their note about Battery Day was, vertical integration through acquisition is very capital intensive, very time intensive, and better companies have failed at properly integrating work teams and all of the IP. So it would be really interesting to see how well Tesla can deliver on those kinds of promises by leveraging the technology that they've acquired through these other companies. And then on the clay side, that was just when that came out. I just remember listening to it and thinking, is he misspeaking? Like, maybe he just didn't get the full language by the assumption that you can just add sodium chloride to a bunch of clay and just get lithium out of it. But actually what was interesting about that, I thought, was that maybe he was hinting, although he did not use the specific term, he was hinting at probably a process that was going to use a version of direct lithium extraction, which I thought was an interesting boost to an upcoming way of lithium extraction that we do see there being a decent amount of promise in future applications, and it did, give both a boost and a curse to current more advanced stages of clay resources in the North America region. So for better or for worse for some of those companies. And then I think that one of the main things out of this that we took, which I think does have concrete implications for battery metals demand, particularly, is the fact that he did seem to confirm that the LFP chemistry will be utilized in lower range Tesla 3 models outside of China, which was something that he had not really sort of clarified before, although there were some rumors floating around and things like that. So we are looking at that now more deeply in terms of how that might change the overall chemistry mix. It's still not confirmed, and obviously there is still a commitment to that higher nickel sort of future battery, but whether or not it'll be applied across all models, it seems to be more of a flexible point now.
Yeah, and maybe I could add a little bit more on the ground levels, because we talk to miners, refiners, precursors, and cathode makers on a daily basis. So a lot of things we heard from the market is that, well, Tesla is shift to a cobalt-free battery, or more like LFP is, in short term, it is indeed getting more attention because of its cost efficiencies, and especially that's in domestic China. But many are still believing that the NCM batteries will continue to occupy some market share, and also due to the safety and high cycle life. So market sources actually have indicated that it's more like a concept that well, it's hard to materialize, and maybe some of the supply chains have been in place. There wasn't much really that impact to cobalt prices, especially on the spot prices itself, post Tesla's announcement. So if we are looking at cobalt sulfate price itself, it's still been trading at 53,000 yuan per metric ton in China domestic market, and cobalt hydroxide has been trading at $12 per pound delivered to China, and which is kind of like unchanged week on week. So market is still observing or digesting the news, but clearly we are keen to trace how that news and technology changes are going to impact the spot prices of the battery raw materials in a longer term. Thank you.
Yeah, I think you made the good point earlier, Joyce, about that. Tesla have rumoredly signed this 4-year deal with Glencore for hydroxide. So it's how seriously are people taking the cobalt-free battery at this stage is, maybe not that seriously.
I think
Yeah.
cobalt free is a really long way away. There's a whole bunch of things that cobalt's obviously really not wanted societally because of all the questions around artisanal mining and also the rareness of the material. But in terms of the materials chemistry and the stability that it offers to structures and to the cyclability and the long-term operation of the electrode in the battery, I don't see cobalt going away unless unless researchers can come up with materials and electrodes that can be scaled and have the same cycle performance as what's currently being used in the NCM case. And at the moment, that's not seen, or we don't have electrolytes that can support those materials. So the energy density, specific capacity, the voltage, all of these things are really critical. And unfortunately, cobalt underpins a lot of that. So whilst the wish list is let's remove cobalt, it's not that easy. And if it was that easy, we would have already have done it.
Yeah, absolutely. And I guess just to close us off here, does anyone want to kind of chip in? Any thoughts on the outlook for the batteries, over the next coming year or so, like 2021? Do you have any thoughts on what we can expect from the market?
Maybe focusing specifically on pricing. As Joyce sort of pointed out with carbonate and hydroxide and also, quite frankly, lithium spodumene prices, we are now sort of seeing it reach that level where it's not sustainable anymore. So something I think around 50% of new projects that are post-feasibility, or so even some of the projects that are currently still operating but maybe at limited capacity, are pretty much not in the money anymore under current prices, even if assuming a relatively low margin of, let's say, 8% to 10%. So that's that does spell some issues for the viability of sort of market balance going into an accelerated recovery of demand, which some of us are expecting for the 2011-2012 period, a more sort of delayed V-shaped recovery, I guess, if you will, in next year. So that is one of the things that we are trying to flag more now. Before there was some room for a decline, but we are at the point now where we've seen mostly lithium prices have reached the point now where it's just not sustainable anymore. And for a lot of particularly the hydroxide integrated converters that were under consideration for Australia and are now sort of, awaiting better prices, for them to come to the market, which is pretty crucial for us to have market balance. After 2022, 2023, we do sort of think that there has to be a recovery going into the end of this year and possibly next year. I don't know, I'd be interested to see what other people's opinions are on that.
Oh, well, maybe I could add on a little bit on the pricing itself. So on the lithium carbonate side, we have already witnessed a bottom price of 40,000 yuan per metric ton in Chinese domestic market, which is actually far below the production cost, given that spodumene concentrate price, the spot price, has been trading at the bottom of around $375 per metric ton FOB Australia price. And while the lithium hydroxide is still trading, it's still range bounding at the kind of bottom, like 48,000 yuan per metric ton in domestic China market. Many market participants have actually indicated that at such price levels, a lot of lithium converters are suffering from loss, and this is not really very sustainable in a slightly longer term. So we have noticed a slight recovery in the orders in Chinese domestic markets, as well as kind of on the exports of the Chinese converted lithium chemicals prices. Yeah. So it's just to add on to Sophie's points.
Yeah, I think likewise we're expecting a relatively strong recovery next year. Who knows, if Biden wins the US presidency, he could get more positive. He's promising a $2 trillion package to rejuvenate the US economy. I think for lithium, we're a little bit more bearish. I think we expect prices roughly the similar level to this year in lithium. Cobalt will likely tighten a little bit next year. We think it'll be the second year of Mutanda closure, and obviously a lot of the artisanal and small scale production is contracted this year, and that will filter through a little bit. We've already seen obviously tightness in intermediates market for cobalt this year. And for nickel will lose its good run, we think. Chinese stainless has been booming this year, but we have so much NPI, nickel pig iron, coming out of Indonesia, and sooner or later it's going to catch up with nickel prices. They're just not sustainable. So nickel's looking a little bit oversupplied throughout the medium term, just because of this fantastical growth coming from Indonesia. So
Yeah, we have some concerns as well with the nickel market because of so much class 2 coming on, and there isn't quite nearly enough class 1 demand to offset. Batteries are growing, but not nearly at the volumes that stainless steel traditionally has consumed the material, and that's a bit problematic since the nickel prices, there's not really a tiered distinction between those two qualities of product, and so when you're using it as a benchmark for whether or not future class 1 capacity is viable from a cost standpoint, it's a bit problematic. I agree that sort of in the near term there might be some challenges in terms of having nickel prices sustained at levels that could support some of the more ambitious class 1 capacity that's coming out of Southeast Asia and Australia.
Amy, I've got nothing to add. My crystal ball doesn't go that far.
All right, great. Well, I think that just about wraps it up for today. So thank you everyone for taking part in this batteries panel for the 1-to-1 Mining Investment APAC online. And we look forward to seeing everybody at a live event soon.